Welcome today to Health Insurance Dissected. This is the second to the last Get Savvy webinar in the Get Savvy Grow Your Green Stuff webinar series. We have a lot of content to go over today, so we'll go over it fairly quickly. Again, if you are familiar with the Get Savvy series, we use the chat feature a lot. If you have questions at any time during today's webinar, feel free to put them in the chat. We have people monitoring the chat, and we will also address any questions that can't be addressed during the webinar or in the chat at the end of today's presentation. My name is Andrea Pellegrini, and I run the Student Money Management Center out of University of Bursar for the entire University of Illinois system. And I am joined today by Brian and Nikki. Brian, would you like to introduce yourself a little bit?
Yes, I am the one on the left with the fun picture of the butter cow at last year's state fair. My name is Brian Gorman. I am the Director of Out Consumer Education for Get Covered Illinois, which is a business unit within the Illinois Department of Insurance. Get Covered Illinois is the state's official health marketplace, and we help eligible consumers enroll in qualified healthcare plans on the individual market, and then direct folks to who may be eligible for Medicaid. So thank you so much for having me. This is really exciting stuff.
Thank you, Brian, for joining us today. I'm looking forward to all your subject matter expertise for health insurance. Nikki, would you like to introduce yourself?
Yes, my name is Nikki Giancola Shanks. I am the Director of External Affairs and Student Loan Policy for the Division of Banking at the agency. So I work with a lot of different legislators and different outreach programs, one of them being with Andrea, this series, and our podcast, Making Sense of Money. So happy to be here.
Thank you so much, Nikki. We would also like to begin today by recognizing and acknowledging that all the organizers of the Get Savvy Grow Your Green Stuff webinar series primarily reside in and serve the state of Illinois, which includes ancestral lands of the Peoria, Kaskaskia, Piankashaw, Wea, Miami, Mascoutin, Ottawa, Sauk, Meskwaki, Kickapoo, Potawatomi, Ojibwe, and Chickasha nations. We have a responsibility to acknowledge these Native nations and to work with them as we move forward as a vibrant and inclusive society. So we're going to launch that poll that I talked about before we started the webinar today. We just kind of want to get an idea of kind of who we are dealing with today, who's on the call today, or Zoom. Call is kind of an outdated nomenclature. So hopefully you see the poll pop up. We want to know a little bit about yourself. So let us know kind of what age range you're in. Tell us a little bit about what best describes you. Are you a student? Are you an employee? Are you retired? And then we kind of like to know your gender and race if possible. And that will help us get a better idea of how we have targeted our marketing, as well as it will help, especially our cooperative extension or University of Illinois extension colleagues, to maintain funding. So that's very helpful for us. All right, we have about 80% of people that have responded so far. And in the interest of time, I'm going to go ahead and end the poll. And it looks like we have kind of a broad spectrum of diverse people here. So thank you for joining us. All right, we're going to practice using that chat feature. So in the chat, if you can put in what state and or county you're logging in from today, that would be extra helpful. We get people from all over the state of Illinois, but we also get people across the United States sometimes. And we've even had people join us from Canada, for example. So we have Cook County, Will County, Champaign County, someone from Virginia. Thank you. Lots of Champaign and Cook and Lake County. Thank you. Keep them coming. So We love to know where people are logging in from today. All right, so for our learning objectives, which we always like to go over at the beginning of our webinars, we want you to kind of understand common health insurance concepts and key terms by the end of today's presentation. We also will be reviewing some key components of the Affordable Care Act, or ACA. We'll explore some saving strategies to stretch healthcare dollars. There's a few tools that you can do to help you cover out-of-pocket costs for healthcare. And then we're going to help you understand how to comparison shop for health insurance plans by the end of today's presentation. One thing that we want you to put in the chat is kind of a pre-test. Where do you think most people get health insurance in the United States? Do you think it's from their employer or Medicaid or Medicare? Do you think it's non-group insurance? Do you think most people are uninsured or from the military? All right, most people are saying employer. Yeah, we gave you an easy question, but it was kind of to get you primed to see that there's a variety of places that people get health insurance, but most people get health insurance through their employer. Over 52% of people in Illinois in 2021 got health insurance from their employer. But there's also Medicaid, Medicare, non-group insurance, military provided insurance that can be means to obtain healthcare insurance. All right, so there are also a lot of different barriers to accessing health insurance. There's, for instance, the cost can be quite overwhelming for some people. Enrollment processes can be cumbersome, especially if you are unfamiliar with the terminology used or you have a lot of choices. There's general lack of knowledge can be a barrier to health insurance or healthcare in general. There is also some distrust or suspicion of health insurance or healthcare providers. So sometimes it's easier for people to avoid it altogether. And then there is also social stigma regarding some of the programs that are available, especially to low-income individuals, like through Medicaid or Medicare. So those are all different barriers to obtaining health insurance, but there are tools and legislation in place to help overcome some of these barriers as well as other barriers. So the Affordable Care Act is with the legislative tool that expanded access to coverage. And what it did is provided the ACA health insurance marketplace. Some people just say the marketplace. This is where you can buy private insurance, but you can also get financial assistance to help pay the premiums if you qualify. Not everyone's going to qualify for that financial assistance. And so we'll talk a little bit about that later, but that is one benefit. The other benefit of the Affordable Care Act was an expansion to Medicaid. So that helped provide healthcare insurance or health insurance to low-income individuals that would not have qualified otherwise. And I would like to hand it over to Brian to talk about more of the Affordable Care Act, because he's really the subject matter expert here today on that.
Well, thank you, Andrea. And you know, I'm excited to get the chance to reach out to all of you and kind of do my very best to explain just some small part of the health insurance journey that all of you are on, and whether you're currently covered through your employer or marketplace or Medicaid, we're all always striving for more information and knowledge. And I always kind of share this anecdote as I kind of explain what it is that we do. And about 10 years ago, I was hired by the state to help roll out the Affordable Care Act here in Illinois. It was my job to be the public education director, a role that I'm proudly still in. But at the time when I got hired, my wife was pregnant with our second baby. She was currently employed with a school district in the Chicago suburbs. And I was trying to figure out what was the best insurance plan for our family, whether it's stay in the state plan or to go with the local district plan, and try to get a sense of where it all worked out. And I had spent hours and hours and days going back to HR, looking at different plans. And then finally I'd lost my mind, and I said, look, you have to appreciate how unbelievably vexing it is that the person who was hired to help explain health insurance in Illinois simply can't figure out what his own situation is. So I'm very mindful that regardless of where you are, it's not easy, and there's nothing really intuitive about health insurance. And so moments like this are a good opportunity to get folks pointed in the right direction. So I want to start first by talking about the Affordable Care Act and its highlights. And I know it's been more than 10 years, or actually since it's more than 13 years since it was passed. And when we think of the ACA, a lot of us assume that it's just about the marketplace and a place for people who don't have employer-based coverage to get to select a plan with tax credit. The Affordable Care Act is so much more than that. And at its heart, it was a reform how health insurance was delivered. And it ended some of the most horrendous practices of insurance companies that are no longer there, but also provided additional benefits like the marketplace. For example, as is put on the screen, consumers can stay on their parents' policy till the age of 26. We all know what a transitional period this might be, and it gives parents and young folks a little bit of peace of mind that they can stay on that. It presents challenges as people age off, but at least we know that you're not just cut loose when you turn 18 or when you graduate college. There is a period where you can extend. The coverage for pre-existing conditions, I think people forget that was a thing where if people thought you were sick or too expensive, insurance companies could say, you know what, we're not going to cover you. You didn't pass our tests, so you're too expensive to cover, so we're not going to cover you. They can't do that. There's guaranteed issue regardless of your health conditions, as long as you meet the kind of the standards that are set with residency, et cetera. Closing the donut hole for prescription drugs. So, the donut hole is the gap between what Medicare pays for. That is ended. Insurance for those on employer plans, the marketplace, and Medicaid expansion. Illinois was one of the first states in the country to expand Medicaid to childless adults. People forget that prior to the passage of the Affordable Care Act, Medicaid plans were not available unless you had a child. And so now adults who don't have employer-based coverage or meet the income standards can get a standardized quality healthcare plan through Medicaid at no cost to them. So this is a really big, in addition to the mental health coverage and drug addiction services, preventive care is free included. And then obviously the rules for insurance companies that they have to set a certain amount of their money that they take in premiums on healthcare coverage. So in the past, people could collect $100 in premiums, and only $50 of that 100 would go to care. Now that with the medical loss ratio, that number is in excess of 80%. So there is a norming process, and it's been a lot of court challenges and adjustments, and it's a very dynamic environment. But it's important to take a step back and realize how far we've come just in the last 15 years where we've been. So I talked a little bit about those consumer protections for the ACA, and then there's the 10 essential health benefit categories. That means that every single plan that's sold on the marketplace or meets minimum essential standards, that means with your employer-based coverage as well, have to have those 10 essential benefit categories. And we'll go over those in the next slide, if you just before we move on. I mentioned before, it provides coverage with people with pre-existing conditions. That's a protection for consumers. You know that if you sign up and you're eligible, you're going to get covered regardless of whether or not you have a pre-existing medical condition or a woman. Private women were charged more than men, and their premiums passes the ACA. Eliminates annual and lifetime dollar caps and out-of-pocket costs, so consumers know exactly how much they're going to be spending each and every year once their deductible is and their cost sharing is included. So some really great protections for that. And I mentioned the 10 essential health benefits. And again, these are in no particular order of importance. But every single plan that's sold on the marketplace or meets the qualifying coverage standards of employer-based care has these 10 essential health benefits. So mental health and substance use disorder, applicable to all parity laws throughout the states. Maternal care is covered, prescription drugs are covered, free preventive and wellness services. So I encourage everybody who has a plan to take advantage of getting your vaccinations, and seeing your doctor for wellness checkups every single year. Again, these are all vitally important. They're covered at different levels, but every single plan has to have it. Next slide. So I talk a little bit about the marketplace. Again, there's two elements of consumer choice when it comes to the marketplace. One is Medicaid, and that is dependent upon your income threshold if you don't have any income. But for those folks who may meet the federal poverty level requirements and you're eligible for marketplace plans with subsidies, you have to live in the United States. You must be a U.S. citizen or national. You must not currently be incarcerated, and if you don't currently receive qualifying coverage either through your employer, Medicare, Medicaid, or another source that provides that. So I always tell people, if you have employer-based coverage, you don't need to do anything. If you're over 65 and you're on Medicare, you don't need to do anything. If you're on Medicaid and currently enrolled, you should update your information with Healthcare and Family Services, but ultimately you don't need to do anything. But anybody else should take the time to enroll in a plan. As we mentioned before, there's still about 6.9% of Illinois residents who we still have to make sure they get coverage. All right, so the ACA marketplace has what we call enrollment periods, very similar to Medicare. And every November 1st through January 15th, there is a 10-week window. It's been modified over the course of years, but generally it's from November 1 through January 15th, where folks can enroll in a marketplace plan. And that's a period where you go to getcoveredillinois.gov and you can shop for it, compare for hundreds of plans. We had 11 carriers last year that sold plans throughout Illinois. So we have a very robust marketplace for plans, and that's where you get your cost sharing reductions and your tax credits to help make your premium payments each month. So right now, as I said before, this year it's going to be November 1 through January 15th. However, I know that there are what we call a special enrollment period that are triggered by qualifying life events. An example of a qualifying life event which would trigger a special enrollment period would be losing your health coverage from your job, and that could be for any reason. If you get sacked, if you quit, if your job vanishes, it doesn't matter the circumstances for your separation with your employer, but if you have qualifying health coverage through that employer, you then qualify for a marketplace coverage. If you've moved, if you've got married, if you got divorced, if you had a baby, if you adopted a child, you will have 60 days from that particular moment to enroll in a plan. And again, we encourage everybody, if they know that there's going to be this transitioning happening, to enroll right away, because you only have 60 days. But of course, it effectuates, or it goes into effect the first of the next month. So, for example, when we get the calendar today, if you were to lose coverage, it's the 12th of April. In order to have coverage starting on May 1st, you need to enroll by the 15th of this month. So again, we put a lot on consumers to be proactive and make good choices, but there is some flexibility. So I mentioned premium tax credits, and this is one of the most attractive features, I think, of the marketplace plans, and overcame what was a significant barrier for people to get covered on the individual market, was affordability. And individuals and families making up to 400% of the federal poverty level, which is roughly about $98,000 a year for a family of four, just to kind of put it in context, would be eligible for a premium tax credit to help cover the cost of the monthly premium payments. And these PTCs or APTCs, because they're paid in advance of the year that you're planning on using them, are issued on a sliding scale. So if you make closer to $90,000 a year, your tax credits would be less than some family who makes $60,000 a year. But we can say in Illinois that more than 85% of residents who enrolled in a marketplace plan last year received some form of tax credits to help cover the costs of their premium. So, and most people on average pay about $70 a month after those PTCs have been calculated for those that do receive it. So it's really, really important to make it affordable. When you see, okay, the monthly premiums for a family of four could be $1,200 or $1,000 or $1,500, depending on the plan that you select. But after you go through the process of enrolling and you calculate what your tax credits might be, that could be somewhere between 70 and 250. So much more affordable for that as well. And again, the only place to find those, to be sure to find those, are on Get Covered Illinois or healthcare.gov. It's we work with both federal websites as to do that. So it's really, really important that people understand that yes, health insurance is expensive, but there is significant help in the affordability factor of those plans. And as I mentioned before, we live in a very dynamic health policy environment, and there's always new legislation that's coming out of Washington and here in Springfield that modifies and obviously will hopefully improves the experience for people as it relates to the marketplace. So during the pandemic, there was a $1.9 trillion stimulus bill that was passed. And one of the things that was included in that was increased financial assistance for people above 400% of FPL. So they call that the coverage cliff, where people all of a sudden get right up to that number, and then they've gone from a small amount to absolutely nothing. That kind of eased that cliff for folks as well. And then the plan was those assistance levels were set to expire in 2022. It caused all of us that work in this space a lot of upset tummies and nervousness. And along comes the Inflation Reduction Act, or the IRA, which was passed in 2022 and extended those savings and subsidies through 2025. So we're hopeful that Congress will do more to provide support. Obviously, through navigator funding, there's a number of different tools that we know that work, but we've never been as low as we are right now in terms of our coverage. And we really, I know it's 6.9% is lower than the national average, but there's more work to do. And things like cost sharing reductions, advanced tax credits, consumer outreach are all things that contribute to a more effective and productive marketplace. So the question is, when can you apply for these savings? So when you go to healthcare.gov or Get Covered Illinois, again, I keep one will lead you to the other, will get you to the right place. You'll be automatically considered for tax credit based upon your income, where you live, and the household size. And you're already eligible for those APTCs if you're enrolled in a marketplace plan. So you don't really need to do anything. It's calculated as you go through. But one point I want to kind of, if you're thinking about taking a note here, and I may repeat this later on, the tax credits, as I have said, are paid in advance. So you say, me and my household are going to make $50,000 upcoming next year. It's an estimate, right? You think you're based upon last year's W-2s. I'm going to make about $50,000 a year. That will qualify you and your family for tax credits to help make your payments. If you see an increase in your earnings over the course of that year, it's critical that you communicate those earnings differences to healthcare.gov, so there can be an adjustment through your tax credits which you receive. Because what will happen and continues to happen is that the IRS does reconcile what you've earned and how much you've received, and people have been facing very, very large tax bills at the end of the year that kind of takes them by surprise, because they took and accepted tax credits in advance that they were not eligible for. So again, making sure that you're constantly on top of, be savvy, if you will, of what it is that you're earning each year, and communicate that through healthcare.gov. So again, these are a sliding scale, and again, I want to be cautious. I know that Andrew had mentioned that we can't handle individual specific questions, but we want you to know all the tax credits are calculated on that sliding scale that looks at your household income for that month and then calculates the amount of people that are there and your income based upon the plan that you select and where you live. So there's no one size fits all. You don't get a better rate by living in a different rating area across Illinois. That's not how it works, but it does calculate what your household size is and how much money you've earned. And again, 86% of Illinois residents have received that. And as passage of the IRA last year, nobody paying more than 8.5% of their household income towards the cost of the benchmark plan, which is the plan that is submitted by each state each year that calculates the amount of subsidies that were included. So again, this is a situation where going into the year how much that at its absolute top you can expect to pay towards healthcare. So it provides some measure of stability. If you want to leave your employer and become an entrepreneur, but you want to make sure you have healthcare coverage, you can calculate whatever the worst case scenario, 8.5% of our household income will go towards healthcare. It'll never go above and beyond that. And again, we were reminded that health insurance and health coverage bills are the number one driver of bankruptcy. So having some sort of control, being enrolled, making sure that you know what you're facing as a household in the year ahead, I think is critical. So with that, I will turn back to you, Andrea. Thank you.
Thank you. Nikki is going to cover the health insurance medical costs section for us. We're going to be going over some terminology. So I'm going to hand it over to Nikki now.
Hi, everybody. I apologize. I do have a little bit of a cough, so I'll try to keep it to a minimum. But as Andrew said, I'm going to go through some of the buzzwords that you hear a lot with health insurance. All right, so let's talk about some of the out-of-pocket costs associated with health insurance. As you're looking at this list of terms, I'm sure many of you have heard them before. So let's talk a little bit about each and how they're different. So premiums. A premium is actually the amount of money that has to be paid for an insurance policy. So this may be done monthly. If you have employer health insurance, you may see it taken out of your check each month. However, you set up, that's basically the cost that you are paying to have health insurance. So a deductible is the amount that you must pay before your insurance company contributes towards your health insurance. So what I mean by that is essentially that you are paying for everything out of pocket until you meet your deductible. So if your deductible is $1,000, that means out of pocket expenses, you're paying up to $1,000. And then everything else above that, your insurance is going to kick in. If it's $10,000, then that also means you're paying up to $10,000 before your insurance starts to cover. So that's when people talk about to check your deductible cost for high deductibles. That's what that means. A co-payment, that is a fixed amount that you pay for one of your covered healthcare services in addition to your in addition to the amount that your insurance pays or your insurer pays. So for example, you may have a $20 copay every time you need to go to the doctor. So that means you're paying $20 and the insurer may be picking up the rest. And then there's co-insurance. This is, again, your part of the costs regarding a covered service. And this is the part for the allowed amount for the service. So you pay that amount once you meet your deductible. So co-payment and co-insurance is a little confusing not a little, let's be honest, it's a lot confusing. They're very similar, but basically a co-payment, you're paying for every time you go to the doctor or every time you go to something, you may have a copay. And that may or may not count towards that deductible that we talked about. Co-insurance is after you pay that amount once you have met your deductible. So it may be then your payment becomes smaller because your insurance is picking up more. And that's all going to be based on your individual health plans, which is why it's important to look at for these types of key terms within your plan to know how much you are going to have to pay. Over-the-counter medicine, that means that you don't need a prescription for it. And these are often not covered by any type of health insurance policy. So for example, I have this cough. So when I go to buy Robitussin, it is not covered. I'm paying that right out of my pocket for over-the-counter. There are also non-covered items. I know it's not listed on the slide, but just to be aware of, even though they kind of fall, people may think of them in the bucket of health care, it's actually not covered under health insurance. And this is eye exams, teeth cleanings, any type of dental work. Like generally you have to have separate dental insurance that's not covered under health insurance. All right, so I'm going to ask the chat. Let's say you have, in general, how much do you think a health insurance policy is worth? Let's see some guesses. Do you think, so in other words, how much do you think a company is paying per person?
Say like per year, annually.
Thank you.
Yeah.
$600 to $700. Does anybody else have any guesses? 1,000, 24K. So definitely a range, 2,400, 30K. See, definitely a range of answers here. So let's go ahead and take a look. So this is your value of what your employer health benefits is. So about 8,000 per year. These are 2022 numbers. So about 8,000 per year for single coverage and about 22,000 for family coverage. So that is what your employer health benefits, if you were going to put a dollar amount associated to it, that's roughly what it amounts to. All right, and then this figure kind of shows there are a lot of different types of health plans. Andrea is actually going to talk a little bit more about these in the next set of slides. But you could, the thing I want to focus on here is how much the darker blue is the employer contribution, and then the lighter blue is the worker contribution. So you could kind of see how much your employer is paying towards your health insurance versus how much you have to pay. And again, just we want to stress that every employer is different, every plan is different, but these are kind of averages. All right, so then who pays for your health insurance? So basically what happens is for employer covered health insurance, you as a worker or an employee and your employer divide the cost of your health insurance premium. So again, these are just averages, but workers, the employees, so you would pay usually about 17% of your health insurance premium for a single person, and then 28% of the premium comes from family coverage. For family coverage comes from you. The rest would then be picked up by your employer. Again, typically, because everything is based on depending where you work and what type of health insurance you have. So we just also, Andrea and I did a webinar called What's Your Job Worth, where it kind of walks through more in depth how employer benefits can help you and how they can kind of save you money. And when you're evaluating different jobs, which to take, maybe if you have multiple offers. So we will definitely, I think that link will be in the chat soon, I believe, and then we'll make sure, just check it out if that interests you. All right, so we talked about deductibles and copays, right? They're both part of your out-of-pocket expenses. So even if you have met your policy's annual deductible, you will still pay copays until you reach your out-of-pocket maximum. Your out-of-pocket maximum is typically different than your deductible. It also means it's usually higher than your deductible. So let's start. I'm going to kind of work this equation backwards. So you have your out-of-pocket maximum. So you're going to pay copays, coinsurance until you reach that out-of-pocket maximum. Sometimes you're still going to pay those even once you reach them. But typically that's how much they're saying, no matter what's happening, you would pay the most you're out of pocket. What is your out of pocket? Your copay. So that's the amount paid for you by medical services that are covered, and your deductible. All right. So that your deductible is expenses you pay before expenses paid by insurance. So your copay plus your deductible equals your out-of-pocket maximum. So let's look at some examples, because again, this is very confusing. And for me, it's a little bit easier to understand when you are can see it in real life. All right. So let's just say this is Lucy and her health insurance plan through her employer. She pays $103 per month. Along with her $103 per month, these cost $30 for copay, $10 for prescriptions, $50 for emergency room visits, and 20% of the cost of medical procedures. So that's her insurance in a nutshell. So let's say she got sick and Lucy went to the doctor. So without insurance, the appointment is $120 and the antibiotics cost $110. However, Lucy had to pay out of pocket $40, $30 for her doctor visit, and $10 for her prescription. So that's how her insurance worked there. All right, so let's say Lucy was out and she fell and she had to go to the emergency room to get stitches. Without insurance, let's just say the procedure cost $250. However, she paid out of pocket $50 because that's what her insurance plan says she has to pay for emergency room visits. And this, we don't want you to worry about necessarily how, you don't have to worry about all the different numbers on here. We just want you to see the general trajectory of how much deductibles are increasing, okay? They are just going up and up and up. So it's really important that even if you know, let's say you've been on the same health insurance plan for years, your deductible may still be going up with rising costs. So make sure that you are paying attention to that and developing a personal plan for how to manage that cost. So that way you're budgeting to make sure your healthcare is covered even with insurance. So a little question for you guys in the chat. What type of tips do you have to help manage your out-of-pocket healthcare costs? Does anybody have anything?
Don't go for the easy, don't get sick.
Flexible spending. We're going to talk a little bit about that. Eat well. HSAs, we're also going to hit that. A savings account. Yeah, that's use generic medications when available. Savings plans. These are all great answers, guys, and they're all correct. There's different ways. All right, so these were both mentioned in the chat right now. This is just a quick overview. We could honestly probably do an entire webinar just on HSAs and FSAs, right? HSA is a health savings account. FSA is a flexible savings account. Both of them are funded with pre-tax dollars. And then any withdrawals for medical costs are tax-free for both, whether it's an HSA or an FSA. The differences between the two, in HSA can be established by an employer or an individual if you have a qualified high deductible health plan. So maybe your deductible is just so expensive that maybe an HSA can help you. An FSA is only established by an employer. You cannot open one as an individual. An HSA has no deadlines. At FSA, you have to use it or lose it by the end of the year. I, for example, know a friend of mine who has an FSA, and 1 year his family, they didn't, they were going to have extra money left over from their FSA. So he went and bought a bunch of sunscreen because he was going to lose that money otherwise. So he went and bought sunscreen for the summer. An HSA, when you leave your job or switch jobs or switch careers, your HSA goes with you. But in FSA, it's very possible that you lose your balance in your FSA account if you switch jobs or lose your job. So, as I said, that was a quick overview of those two, but we just wanted to make you aware of it. I am now going to turn it back over to Andrea to kind of talk about health plans in general and how to balance your choices.
Thank you so much, Nikki. So now that Nikki and Brian have given us the language that we need to better understand the health plans and insurance that we have access to, let's talk about how to analyze and compare them. So a lot of the people that we reach out to are in transition, right? I deal primarily with students, and students are constantly in transition. But we talked a little bit also about being able to stay on your parents' insurance until age 26, but there's lots of choices regardless of where you are in your life. We have transitions throughout our lives. And so you can stay on your parents' insurance until the age of 26 if you would like. That's not always an option because access to insurance varies, right? So for uninsured parents, they obviously can't provide insurance to their under 26-year-old children. College insurance is also a problem, or not a problem, an option if you don't have access to health insurance through other means. However, college insurance you can waive out of if you've already been covered by something else, for instance, on a parent's insurance, or if you have insurance through an employer, which sometimes is offered to part-time employees as well as full-time employees. We have a lot of non-traditional students at all of our universities in the University of Illinois system. So there's a lot of full-time employees that already have insurance elsewhere, so they can waive out of the college insurance. Employer provided insurance, there can be a lot of options when it comes to employer provided insurance, depending on who your employer is. And not all employers are going to offer the same types of plans. So if you are married to someone, for instance, that works for someone else, you might want to compare your employer provided insurance options between both of you, so that you can get the best one for your needs. There are also government-sponsored health programs, which we talked about, Medicaid and Medicare. And then the ACA Marketplace provides an opportunity to compare private insurance plans if you're not covered by one of these other options, right? So those are all different choices, which makes it kind of overwhelming when it comes to choosing a health insurance plan that works for you. All right, so in order to comparison shop mindfully, here are some things that you want to consider. You want to balance your monthly premium costs versus the deductible level that's available through that plan. It's also important to consider what mental health options or other specialized services are covered. Luckily, those 10 essential benefits helps provide some options, but those provide for minimums, and some health insurance plans are going to provide more coverage or less coverage. There will be a minimum, but if you need more coverage or want more coverage, it's important to look at those specialized services. It's also important to consider if all family members can qualify for the insurance plan that you're looking at. For example, let's say that both you and your spouse work for University of Illinois. Me and my spouse both work for University of Illinois. And so we are limited in that we can't both be on the same health insurance plan. We have to have our separate health insurance plans because they're both provided as benefits to each of us. However, when we worked at separate employers, that was when we were able to compare plans. And there are some employer provided plans or employer sponsored plans that may only cover the employee and the employee's children, but not the employee's spouse. So that's something to look at too. Is everyone in my family going to be covered by this plan? And is there an alternative option if not? There's also, you want to consider if your preferred hospital and medical providers will accept that insurance, because that's not always the case. So it's important to make sure that you're looking at that. And you also want to look at if there is coverage for regularly prescribed prescriptions and other medications. So we dropped a cheat sheet in the chat to kind of give you a better idea of how to comparison shop there. So that may be helpful, especially as we come up to open enrollment periods for the state of Illinois employees. All right, so one more set of health insurance terminology to kind of cover. When you're looking at policies, you might notice some of the plans are PPOs versus HMOs. And this is just an example of how a person might have different choices than other people, since not all employers provide the same type of coverage. So you won't all have the same type of choices. So whether you're looking at a PPO or an HMO, those plans must meet the standards and protections of the ACA, which Brian already went over, that provide those essential benefits. But the PPO has a special network or group of healthcare providers. The payment options for using in and out of network providers may be different under a PPO. And then you may have more choices for providers than under an HMO. And so that is one, those are things to consider for PPOs. For HMOs, this includes coverage from providers within the HMO network. It generally will not cover service outside of the network unless it's an emergency. And it does typically cost less than a PPO. So those are things to consider when you're looking at those two differences. And there are other types of plans, but like with any type of comparison when it comes to financial planning, read the fine print. We know it's exhausting, but when you're making decisions for your healthcare, it can be really helpful. All right, so I'm going to hand it back over to Brian to talk about the cautions when shopping for coverage.
Can you hear me okay, Andrea? I know I was having some echo issues before. Can you hear me all right now?
Oh, yeah, you sound good now. I was just muted, so hopefully that maintains.
Okay, perfect. Thank you so much, Annette. My apologies. So yes, I appreciate the graphic here, the stay alert. As I mentioned before, health insurance is not the most intuitive and easy product that you're ever going to consume. or purchase in your life. And there are a couple things that we just want to point out before you go. One is the availability of short-term limited duration plans. They're sometimes called STLDs or STLDIs. Some advocates call them junk plans. But what they are products that are sold in the marketplace that don't meet the standards set by federal CMS or through the State Department of Insurance for qualifying healthcare coverage. They are aggressively sold and marketed, and often to a demographic who is young and healthier as a way to save money, but there are a lot of perils within those as well. I'll talk about that in a second more. Second is tax planning considerations. I touched on that earlier. The idea that you have to continue to be updated on what your income is. If you are receiving more income than you thought at the beginning of the year, you need to update that information, because there will be clawback from the IRS at the end of the year when you go to file your 2023 taxes. For example, if you thought you were going to make $50,000 in 2023 when you enrolled, but you're in a sales position where you made a lot of money, or whatever reason, you made more money than the year that you thought, that's a way the IRS will get those APTCs back when you go to file your taxes next year. And then again, I saw someone commented in the chat about understanding in-network versus out-of-network provisions. Obviously, there are some legislation that passed last year to protect consumers a little bit for unexpected bills, but you should really call and make sure that the physicians and the places that you're seeing in non-emergency situations are in network. And again, just as an example, I made some phone calls this morning on behalf of my family about making appointments. And I wanted to make sure that the physician that we were seeing was in network, because I don't want to get hit with a surprise bill, as well as understanding travel insurance and healthcare costs as you're moving from spot to spot in a transition. So taking your time thinking these things through is critically important. I just want to kind of, again, go back to the next slide to talk about short-term plans a little bit, and explain them, because they are a real risk to consumers as they're looking for value. They think they're getting one thing, but they're getting something that doesn't cover the same richness of benefits that you can get on an ACA plan. And it was originally designed to address kind of short-term gaps in healthcare coverage, very similar to what COBRA might do as from one plan to the next. Again, that's no longer required because there is an SEP, and there's ability to churn between Medicaid and Marketplace without any gaps in coverage. And then in 2018, during the last administration, a judge ruled that these could be sold for a full year. Originally, they were designed, again, the name implies a short-term plan, which was a maximum of 90 days. A judge said, no, you can sell them through the year. So essentially, they're being sold as to not do what they say they're going to do. And again, there are no protections that are implied within the ACA. We have no jurisdictional authority over those plans to make sure that they are compliant with. So your preventive care may not be covered. You can be denied coverage for pre-existing conditions. You can be capped out. There are things that are not covered in your plan. So read the fine print. I would strongly urge everybody to get enrolled, particularly with the tax credits and cost sharing available in a qualifying coverage. And just kind of want to go over, again, the differences in an ACA plan. All applicants, regardless of health status, we covered that. Pre-existing conditions, yes, no. Higher rates based on health status. A woman could potentially be charged more from a man of the same age, same health status, just because they're a woman. That is also a possibility. There's no protections for that. No essential health benefit coverages, so you have to read through what is in the plan before you purchase it. And then there are caps, so you can be dropped at any moment throughout this process. And again, caps enrollees out-of-pocket costs. The only way to guarantee that you get all those consumer protections is the selections of a plan through Get Covered Illinois or healthcare.gov if you're out of the state. I know that we mentioned that there's some folks in and Virginia, welcome, but making sure that you're staying clear of those short-term plans if you're thinking about your future. All right, and then, as I said before, there is the understanding that you're not in this alone. As I mentioned repeatedly, this is not easy. It's confusing and stressful. We want you to know that there is free local help, regardless of whether or not you live in Illinois. You can go to getcoveredillinois.gov. There's a little button there that says get free help. You type in your zip code, and you can actually schedule an appointment right there on the site to either do it over the phone or in person with a certified trained assister, free of charge to you. They don't work on commission, but they can help walk you through what the options are for you and your family. Perhaps some of your children may be Medicaid eligible, but you're marketplace eligible. They'll walk you through the options. And again, there's also a feature if you're outside of Illinois, going to healthcare.gov. That's the local help function as well. And I will also say that there are licensed agents and brokers that also can be of assistance that work in your community. If you have somewhat of a complicated case or you're in business, a number of different reasons, they can be a resource for you as well. Just make sure that you're insisting on getting qualifying coverage. And here is a list, and I know that we're gonna share this as well, a number of different local resources here in state that can be helpful. They say Get Covered Illinois usually is your first place you want to go if you live in state where you can get in-person help, find information, and then when the time comes to select a plan, the place to begin, DOI, Medicaid, those are all websites that are here. And here are some numbers as well. If you have complaints, calling the marketplace, you can actually enroll over the phone. And then I always would like to remind folks that there is if you're or someone that you know is going through behavioral health issue or a substance use disorder moment, there is the Illinois Warm Line, 866-359-7953. That's always available 24 hours a day, 7 days a week. So with that, I will turn it back.
Thank you so much, Brian. So for any of you that need to leave, we are recording this, so we will send the recording when it is available. Don't feel like you have to stay on for the close, but I just wanted to point that out. So to summarize, that we wanted to make sure to point out that the access that people have to health insurance varies dramatically and can change throughout your life. The Affordable Care Act does provide some additional access points and consumer protections regarding health insurance in the United States. Copays, premiums, and out-of-pocket maximums also vary by health plans, so it's important to compare the details. Health savings accounts and flexible savings accounts can help cover out-of-pocket costs, so make sure to look into taking advantage of those if you know that you're going to have certain healthcare costs out of pocket. And then it's important to leverage all the different tools that you have access to in your overall financial care healthcare plan. So just we wanted to keep in mind all of those things, all the valuable information that Brian and Nikki have shared today as well. Our next webinar is going to be on May 3rd, and we're going to be talking about student loan management for anyone that has a student loan, be it private or federal. We're going to focus on federal student loans, but they are going to go back into repayment this year, and having a plan, understanding what your options are so you can be empowered to advocate for yourself as the changes occur. There's still a lot up in the air, but we are going to cover a whole lot of information in this webinar on May 3rd. So sign up if you haven't yet. You can also watch previous webinars on YouTube by going to go.uillinois.edu/getsavvy or just searching for the Student Money Management Center or Get Savvy webinars on YouTube itself. You can stay in contact with all of us in the Get Savvy, Grow Your Green Stuff webinar series as well. So we'll give you that contact information, and we will stick around for some questions. Keep in mind that we have to be general in our responses, but hopefully we can get you some clarity on anything that was maybe extra confusing, because it's all kind of confusing. So Kathy or Amin, were there any questions that we got in the chat that we should address now?
One person did want clarification on whether or not losing their student insurance would be considered a life-changing event in terms of, buying a policy through the marketplace?
That's a great question. I'm going to ask Brian to answer.
Yes, that if your state, sorry, your student coverage meets the standards for minimum essential coverage, then yes, that would trigger a qualifying life event, and you would be eligible to enroll in that plan.
Great, thank you. That's the only one I saw, Andrea.
All right. If anyone does have questions, feel free to put them in the chat now. Make sure that you hold back any personal details, right? We don't want to spread HIPAA information all over the place. But hopefully we can provide some more clarity. And if not, that's okay too. Feel free to head on to your next thing. Again, we're recording this, so we will send the recording when it is available with captions. Thank you for joining us today. All right, so I don't see any new questions, but if anyone does think of a question later, you can email studentmoney@uillinois.edu and we can try to get you an answer. So that is another option if you think of a question later. In the interest of time, for respecting our co-facilitators' time and our attendees' time, we'll go ahead and shut down today's webinar, but thank you again for joining us, and reach out if you do have questions later. We will send the recording and all the related material as soon as it is available. So hopefully in the next week or two.